The market breaks away from 10-day losing streak amidst Trump tariff war issues. The mid-caps lead the charge, with metals and auto indices surging in trade.
Donald Trump, in his 100-minute-long speech to Congress, reiterates his promise to America and defends his trade policy. However, most Asian markets gain a shrugging off Trump's retaliatory tariff threat. Chinese stock market gains on the back of China's 5% GDP growth target.
A day after NSE announces changes in weekly expiry days, the exchange bats for a uniform expiry date across exchanges. Expects uniformity to curtail excessive speculation, which it says was SEBI's original objective. And that's a CNBC TV18 exclusive. Hello and welcome to a fresh new edition of Markets Forward. This is a show where we get you, of course, the blow-by-blow account of what happened today, and then we gear you up for the next trading session as well. I'm Surabhi Upadhyay. With me is Vinny Motiwala. Vinny, thanks so much for being on the show with us. And what a good day we've had. I mean, a full slate of green. I don't remember the last time we saw it.
I think it's forgettable, easily forgettable, because I think only red was on the screen for a very, very long time, at least 10 trading sessions approximately, that we saw red across the screen. And interesting should be that today all the sectors are managing to go home with gains, right?
No, absolutely,
so
absolutely.
Not a bad day coming in for D Street, and that's been an interesting one.
Absolutely. And in fact, that's a very important point, that today's move, the up move that we're talking about in the market, it wasn't just because of a clutch of 4-5 big large cap stocks. It was a wide move. It was an overall recovery from extremely beaten down levels, whether it's the Nifty or you look at the broader markets. In fact, if you look at, and the other good aspect is that the gains were not getting sold into. The gains were steady and they largely remained. It wasn't a sell every bounce kind of a move. So the net result is this 250-point up move on the Nifty. We've managed to come back towards above 22,300 sort of levels. And the advance decline ratio was really heartening. When is the last time you've seen over 2,000 stocks advancing? But it was that kind of a day. The advance decline ratio was a solid 7:1. And like Vinny mentioned, all sectors participated. I mean, almost all. Relatively, you can sort of quibble and say that banks kind of underperformed. But there were gains even there. But autos, like when you were saying, autos, metals, a lot of PSU stocks, all of them did really well today.
Absolutely. Autos, PSUs, everything did well. Fuel, like you were saying, banks that didn't perform. So HDFC Bank, IndusInd Bank, that was a bit of a drag that came in. Other than that, Kotak Bank managed to hold on to good gains. So yes, we saw good moves coming in on that front. But yes, that's how we are looking at the market. A good day coming in. But on the show, we have, very exciting lineup for you all as well. We'll take you all through the important movers and shakers in today's trading session, while we'll go through what are the important corporate voices as well. But let's go across to Hormaz, who's here to tell us what is happening in terms of the top movers for today's trading session. Hormaz, over to you.
The only thing about time is that it changes, and there was a time when we used to see 2,000 stock advancing almost every day, and today we are talking about when was the last time we saw something like this. But we did see 2,000 stocks advancing in today's trading session, and here are some of them. The metals, as you mentioned, were the top performers in today's trade despite the uncertainty surrounding tariffs. But the bigger trigger here was the China stimulus announcements going all out on ensuring that 5% growth target is achieved during the year. Hindustan Copper, Welspun, Vedanta, all of them ending at the highest point of the day. That is the bigger takeaway here. 4.5% to 7% gain seen in most of these names. Plenty of newsmakers in today's session. Coforge was one of them, announcing acquisitions, large deals, stock splits. All of that resulted in an 8.5% up move. Slightly off the highs of the day, but still ending with healthy gains. BSE, though, it opened gap down, a 9% gap at that, and that got bought into a little bit, still ending 3.5% lower. But Lupin and Hitachi Energy on the back of healthy brokerage commentary, and of course BEL after announcing a dividend. A group that did well today were the Adani Group names, all of them doing well in today's trading session, anywhere between 5 to 9%. The Nifty constituent, the non-Nifty names, Adani Wilmar, of course, after the acquisition ending at the day's high. Some of the others that did well on the back of volumes in today's trading session. Avanti Feeds, we usually talk about it only during the budget, but had a good day today. CEAT, Quest Corp, Reddington too, seeing healthy gains on strong volumes. And lastly, some losers in today's trading session in a market like this. Anand Rathi Wealth ending at the day's low, trading X bonus from today. Bajaj Finance was among the few nifty losers in today's trading session, and Voltas, after seeing a stellar move over the last 5 trading sessions, some bit of profit booking in today's session. Back to you guys.
Okay, all right, Hormas, thank you very much indeed. A beautiful big green day today after a long, long time. Let's straight away go to our market experts. We have Mayuresh Joshi of William O'Neill as well as Shrikant Chouhan of Kotak Securities joining in. Shrikant, first to you, considering the technical damage was so severe, all kinds of levels came and went, everything was completely brutalized. Where are we now? I mean, to what extent does today's bounce give you any comfort that perhaps the worst is over?
Yeah, good evening, Surbhi and Vinny. The markets have fallen to its extreme level. If we consider the momentum oscillators or if we consider weekly averages, long-term averages, then based on that, we were very close to those levels. And even if we consider the option statistics, then based on that also, we saw a good amount of put writing between 22,000 and 21,800. And today's news flow overall, as well as the overall performance on the, overall improvement on the global macros, I am of the view that the market has seen its worst for the medium to short term, and we could see bounce back at least up to 23,000 in next few days. Most of the time, what we have seen is that mean reversion sort of pattern, and if that happens, then we may even see the levels of 24,000, but it will take some time. But on immediate basis, we need to see that whether the market can absorb the selling pressure, which is lined up at 22,500. Based on technicals, I am of the view that it is going to absorb the overall pressure, but tomorrow's day will be again the day of, taste of bulls. And if they manages to cross this 22,500, then very quickly we can see the levels of 23,000.
Okay, absolutely. You know, we are going to be keeping an eye out on those levels that are there and hoping 24,000 comes sooner, but it will take a time, some bit of a time is what you're highlighting. Mayuresh, your thoughts on the market as well, right? We're ending today's day. All the sectors are ending on that positive front. We've seen that, Nifty snapped its 10-day losing streak. So surely some cheer coming in on that front. But your thoughts?
Afternoon, Vinny. Afternoon, Surabhi again. No, two things. I think we just put out a report a few days back where we have tried to analyze all the previous market corrections, including the 2008 fall, which was an aberration because I think this was for structural reasons why the market fell in 2008 and 11. But if you leave that aside, the duration of this fall has been extended. The average market fall over the last few years, whether it's 2015 and 19 or the 22 fall as well, the average duration has been 88 to 90 odd days. The maximum duration was 188 days during the 15 fall. And we are already at 152 days as we speak. Again, from a valuation perspective, I think reasonably placed. The dollar index is coming off, which is one more trigger for the markets as well. The gap between earnings yield and bond yield, that has come to long-term averages, where the market is now of the belief that the worst in earnings should probably get capsulated as Q4 numbers probably just play out. And from Q1, numbers should start being relatively better as we speak. And therefore, I think the entire market scenario that we see at Markets with India as well, in terms of the bottoming out process, the lows that we've made, if we hold that out for the next few days, and if we see a follow-through day, our take is that we should be close to a bottom as we speak. And therefore, I think selective sectors, selective stocks should start contributing and doing well as we head into the first half of the next financial.
Okay, all right. Mayuresh, stay on. We'll come back to you for some more questions, but let's also bring in Nimesh and figure out what the chatter on the street was like. Nimesh, I guess after a long time, there would be broad smiles in dealing rooms and on the street. What's the buzz you picked up today?
Well, clearly, Surbhi, a good recovery. And in fact, this recovery has been for the last couple of days, right? So from the Monday's low, the Nifty is up 1.5% and the mid-cap index has recovered almost 5%. So that's clearly a cheer for a lot of the investors as well. Now people are talking about 22,800 as an upside resistance rather than talking about 21,800 as a downside support. So that's how the moods have changed in the last couple of days. In terms of sectors, metals and PSU stands out in terms of buying interest, and the fact that the metal index ended more than 3% higher. So clearly there was momentum back in some of the riskier stocks. In terms of individual names, the first stock on my list is IndusInd Bank. In a trending up market, that stock ended lower despite a small buy flow. And that's because the near-term catalyst for the stock is the reappointment of the MD and CEO, whose tenure gets over end of this month. So that's something to watch out for in IndusInd Bank. The second couple of stocks, Varun Beverages and Interglobe Aviation. Both stocks saw delivery-based buying from larger FIs in today's market. And for Varun, for the last couple of days, you're seeing some sell-side upgrades as well after the recent correction. The third stock is Geo Finance. For the last couple of days, we've been seeing massive delivery-based selling happening. Looks like that's largely over, and that's the reason why you're seeing a big uptick in today's market. And I understand some domestic funds have been nibbling as well at lower levels. So that's Geofinance. The last is NTPC. While the stock rallied today on the back of overall rally in the PSU basket, but there was aggressive selling in NTPC is what I understand as far as flows are concerned.
Okay, Nimish, thank you so much for that. But, we have Rima also who's here to tell us about why Coforge was surging in trade. And this is especially coming in after the company has signed a 13-year deal worth around $1.6 billion. Rima, over to you.
The trigger for Coforge is the company has won its largest ever deal, $1.6 billion over the next 13 years. And that's the reason why brokerages are turning incrementally more upbeat. Kotak upgrades the stock to a buy, target price 9,000. They're saying the recent correction is an attractive opportunity to buy. Morgan Stanley says that the revenues from the deal could be front-ended and the company could see incremental revenues of $80 to $120 million in FY26. That's 5 to 8% incremental growth. Their target price stands at 11,500. That's more than a 40% upside from current level. Even for JP Morgan, the target price is 11,500. They're saying this deal can elevate the company's ability to sign large and mega deals as it approaches their FY27 target of $2 billion. It also increases the company's travel segment revenue contribution to 24%. Separately, outside of the deal, the company has announced a stock split of 1:5. So one share will get split into 5 shares. And it's had a rub-off impact on the rest of the mid-cap IT names. So you're seeing gains of about 3, 4, 5% for the rest of the mid-cap IT pack because despite all this uncertainty, deals are getting signed. Also remember that mid-cap IT had seen a pretty large correction. We're talking about corrections to the tune of about 40-45% for Cyient, Birla Soft. So stocks had, in the recent past had gotten hit hard, and there is a rebound taking place in mid-cap IT on the back of Coforge winning its largest ever deal.
Absolutely, Rima. Thank you so much for that. But Shrikant, taking to you for Coforge as well as other mid-cap IT names, are you finding it good enough to enter this one in terms of levels? Rima was also mentioning, they had seen some bit of a correction in the recent time. So Coforge or any other mid-cap IT name that you're looking at?
Yeah, see, like for Coforge also, we were of the view that it was correcting from the highs. It was around 10,000 levels. From there all the way, it has fallen to the levels of 7,200. But that was the corrective pattern, and based on today's volume and the news flow and the way it opened up with a gap, I am of the view that the stock has completed its correction and now again it is heading towards the levels of at least 8,500 or 9,000. So in case if there is any correction, that will be an opportunity to add some more position. Even at current levels also, the risk reward ratio is quite favorable to buy more at current levels and more on dips. From other mid-cap IT companies, we like Persistent, which is currently trading at 5380. There also, we feel that the stock has completed its correction, today's recovery, and based on its overall volume, delivery-based volume, there also I'm expecting stock to move towards 6,000, 6,200 sort of level. So yes, few IT companies can recover sharply from current levels.
Okay, all right, got that point. Let's move on and focus on one more stock, and a stock that was surging quite well in trade today, and I'm talking about Hitachi Energy. Hitachi was up almost 7 to 8%, and this after Goldman Sachs came out with a fairly bullish outlook on the company. We have Vamakshi joining in with more details. Vamakshi, what is Goldman saying?
Well, absolutely, Surbi. The stock wasn't focused on the back of that note. They have a buy rating on this counter, and they've gone ahead and raised their target price significantly from 8,250 earlier to 13,350 per share. Now, the rationale behind is, number one, the strong order pipeline that they see. They have a very strong HVDC pipeline specifically. Nearly 3 large HVDC projects are expected to be ordered out in the next 1 to 2 years. So they see a very strong pipeline coming in from there, given that Hitachi Energy already has a nearly 50% market share domestically. And they also expect the company to be a significant beneficiary of grid capex as well as non-grid related transmission equipment capex. Now, given the kind of demand that they're foreseeing, the Hitachi Energy has also gone ahead and announced some capex plans. So therefore, they're scaling up manufacturing in order to capture this sort of opportunity. Other than that, the Goldman Sachs has gone ahead and revised its estimates for order inflow. They now are projecting an order inflow for almost 18,500 crores for FY25. This is much higher as compared to what they had envisaged earlier. And for FY26 as well, they've gone ahead and raised their estimates as far as the order inflows are concerned. But not just that, the EBITDA margin, they're expecting the company to close in double digits. 10.5% is where they're expecting FY25 at. This is as compared to 8.8% that they had seen earlier. And FY26, they're expecting the margins to improve further to 13.4%. So given those factors, they've gone ahead and raised their FY25 to 27 EBITDA estimates by nearly 10 to 50%. So massive upgrade coming in out here from Goldman Sachs on Hitachi Energy, and resultingly the stock was flying away in trade today.
Absolutely, Vamakshi. Thank you so much for that 8% uptick for Hitachi Energy. Mayuresh, your thoughts on Hitachi Energy, right? Vamakshi was mentioning strong order pipeline, capacity expansion plans that they have. Looks interesting. Is that something you would look at as well? Because Goldman Sachs, surely they've given that target of around 13,000 plus. So interesting.
It is interesting. And in fact, I think as Vamakshi mentioned, I think the large element for Hitachi Energy is going to be the huge inflow that comes in from the HVDC order book. And therefore, I think a combination of the HVDC order book along with an exponential increase in terms of export demand, that really augurs well for EBITDA margins. Now, the 10.5% margins that they were reporting, the expectation here is that if they exit FY27 with a 13.5 or a 14% EBITDA margin and the top line growth, which the HFDC along with the export order, and even from a segment perspective, Amakshi, I think the growth is well diversified into products, projects, and services, which are expected to grow quite significantly, will mean operating leverage kick in onto their balance sheet, and therefore ROEs should expand beyond 30% as we head into FY27, which is a huge task for a capital-intensive large company. Yeah, so I think if earnings support, I think the momentum can very well hit.
Okay. That's a view coming in from Mayuresh on Hitachi Energy. But, you know, NSE, a day after that, they've announced the change in weekly expiry day. The exchange bats for a uniform expiry date across exchanges. We spoke to Sriram Krishnan, Chief Business Development Officer of NSE, and he says uniformity will curtail excessive speculation. Listen in.
Single day for all expiries in the entire market is the real solution. And so proliferation of weekly expiries on every day of the week through multiple exchanges, like MSCI, for example, has a plan. Likewise, NCDEX seems to have a plan. MCX seems to have a plan. Then there could be OTCI who might come up with a plan. So proliferation of weekly expiries through multiple exchanges is no different from one exchange potentially offering expiries on every day of the week. So perhaps, you know, the solution lies in, one single expiry for the entire market. Responsibility to collectively upgrade and build capacity in the market. Yeah. And if that's the case, then we should be limiting expiries with respect to the expiry day. And you've seen, expiry day shifts being undertaken by other exchanges. And there are also some new exchanges who are planning a foray into equity derivatives to launch weekly expiries. I think it all follows from the SEBI rules, which require only one expiry per exchange. But if the intention of the regulators is to have one expiry, I think it makes sense to choose the optimal day of the week. The rationale for this decision is more to take into account the fact that there are lots of geopolitical events, developments over the weekend, and Monday is a great day to therefore have the expiries.
Okay, all right. That was the NSE official talking about why they have taken this decision to move from Thursdays to Mondays. Very quickly, Shrikant, before we let you go, what did you make of it and how do you think traders will react to it? This whole expiry happening on Monday, is that going to lead to any kind of uncertainty? Because, I mean, if you have positions on Friday, then you have the whole weekend where anything can happen.
Yeah, absolutely. I think the way they have decided this to move it on Monday from Thursday, of course, there are multiple reasons, but the one thing that I can make out is that it will help traders whenever there is like such type of global events in the market. Otherwise, I don't think that that is going to impact any severely on traders. Yes, traders can move their positions from one exchange to another exchange, so that will also help. But broadly, I'm of the view that it is not going to impact severely.
Shrikant, thank you so much for that view. But on that note, Mayuresh as well as Shrikant, thank you so much for joining with us on the show. As always, it's a pleasure having you all. And on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with key events to watch out for in tomorrow's trading session.
Welcome back. Let's take a look at some of the corporate commentary that we picked up during the course of the day. The Blue Star management says that the company is quite optimistic about March and the fourth quarter. The company is seeing strong demand trends as the summer season kicks in, and it's expecting growth of about 30% in the fourth quarter when it comes to AC sales, which would be in line with the industry growth as well. Additionally, Blue Star is guiding for an EBITDA margin to be in the range of 8 to 8.5% for FY25. The company says it also took a price increase in the AC segment of about 3 to 4% in February to compensate for raw material price increases.
And we also have the management of Azad Engineering. The company will be developing 700 crore rupees towards the growth capital, and the management believes Trump's tariff will have a positive impact for the company and doesn't see pressure on margins going ahead. It guides to maintain its revenue growth at 25 to 30% with margins in the range of 33 to 35% for FY26. And before we wrap up, this edition of Markets Forward in CNBC TV18, we bring you the key market events to watch out for in tomorrow's trading session. Upasana is here to give us all those details. Upasana.
Well, it looks like quite an eventful day tomorrow. First up, let us look at the global economic cues. US will be reporting its initial jobless claims, non-farm productivity and trade balance data. UK will be reporting its S&P Global Construction PMI data for the month of Feb. And Europe, ECB press conference is scheduled to be held tomorrow on the back of interest rate decision. Now, Special Leadership Summit is also scheduled to be held tomorrow in Europe to discuss continued support for Ukraine and European defense. Now, let us look at the key stocks that will be in focus tomorrow on the back of corporate action. Capacide Infra projects, fundraising plans, hence board meeting is scheduled tomorrow. GM Brewery's board meeting is scheduled to discuss about the business diversification plans of the company. And the recent IPO, that is Hexaware Technologies, will be reporting its Q3 FY25 numbers tomorrow. Hence, even this stock will be in focus. Now, let us look at some of the other events that will be on our radar. Now, PM Modi will be visiting Uttarakhand tomorrow, and Lok Sabha Select Committee will be examining income tax bill on March 6th and 7th. Hence, even this will be on our radar.
Okay, all right. Thank you very much, Upasana, for that. And with that, it's a wrap on this edition of Markets Forward. Thank you very much for watching. We'll have more news and updates continuing on the other side of the break.